My name is Brett Larson. I'm with Heartland Business Capital. So Heartland Business Capital, we are a certified development company. We specialize in commercial real estate financing throughout the Kansas City metropolitan area. Heartland Business Capital is a certified development company. We have a license to do the SBA 504 loan throughout the Kansas City metropolitan area. We are a non-for-profit that is licensed to do the loan throughout the metropolitan area. So with the purchase of a commercial real estate building, there's typically a couple things that come into mind. One is they can buy an existing building, or they can actually build a brand new facility. They can acquire a land lot and then actually construct a new building on that land lot. Typically our clients probably are what we would call more mature businesses. They typically have a 5 to 10 year track record. Usually a business that's starting up, they're using all their liquidity, all their business cash, their working capital needs to grow the business. But typically our clients are more mature businesses where maybe they're growing like 5 to 20% each year, but they definitely have kind of gone through that hyper growth stage, and they're a lot more steady growth, if you will. So some of the industries that we typically see with the SBA 504 loan when they're purchasing a building or constructing a new building, we typically see like dentists, doctors, could be attorneys, CPAs that want to have office space for their own business. From an industry standpoint, we see a lot of wholesale and manufacturing companies that are looking to have industrial warehouse space for their business. And then also there's a lot of local restaurants. Could be a franchise like an IHOP, McDonald's, those type of users that are wanting to basically buy their own building. Instead of leasing it from a landlord or national REIT, they want to own and have control over their local real estate. So we see a lot of national franchises that are restaurants that have their own real estate as well. Yeah, the major benefits to the small business owner is typically a business owner wants to put as little down payment on the purchase of their building. And so by going with the SBA 504 loan product, they can put 10% down when they purchase the building, and they can get a 20-year fixed rate on the commercial real estate. Typically a bank will fix the rate for around 5 years, but with the Small Business Administration 504 loan, they can fix the financing for 20 years. And that gives them a comfort level that they know what their payments are going to be over for 20 years. They contact a certified development company. So there are 250 certified development companies, or CDCs, throughout the United States. There's about 5 certified development companies in the Kansas metropolitan area. They contact us, and then we partner up with the local bank and actually participate on the loan with the local bank. Major advantages for the business owner and the small business is they only have to put 10% down. So what that does is if they have 20% to put down, they can keep back part of their capital, because typically our clients are growing their business pretty rapidly. And so by holding back the extra 10% they might have, they can use it for working capital as their business grows. The second thing is, again, with a 20-year fixed rate, that's a major advantage. It's almost like a large business can go out to markets like Wall Street and get those long-term fixed rates, but typically small business owners cannot get a long-term fixed rate. So with this product, they can get the 20-year fixed rate for their business. With the 20-year fixed rate, during the first 10 years, if they want to pay off the SBA loan, there is a prepayment premium that declines from roughly 3% in year one, and it declines 10% each year. So if they do pay off the loan during the first 10 years, there's a prepayment premium during the first 10 years of the loan. The second one is that there is, with all the SBA products, there are some fees involved. And so on around $1 million project, there's probably around $12,000 in fees associated with the financing. A couple of them come to mind. One of them is that a lot of times our clients have never talked to a banker. So basically they have deposits at their local bank, but they don't really have a contact. So when they're making deposits, they might know the cashier, the branch manager, but they don't know a commercial loan officer at the bank. So definitely develop a relationship with the local bank and somebody who can actually do real estate financing on behalf of the bank. The other one is we encourage them, when they're working with their commercial real estate broker, to get their documents together. A lot of times they'll go under a contract on a building, but they haven't pulled together their financial statements, their tax returns, and all of a sudden they're under contract in a building and the clock is already ticking. So we encourage them to go ahead and get their documents together, their tax returns, financials, so that they can provide those to the lender to get the process going. We encourage them to treat their vendors as well as their banker as if they're actually one of their customers. It always surprises me. A lot of times, our clients, when they're talking to their bank, they have kind of a short relationship with them. They expect them just to kind of be there, and they really don't develop that relationship. They don't treat them as well as some of their customers. So I would encourage, every entrepreneur to treat their vendors and their banker as if they're one of their customers.